course, or the market makers secret trading system. This of course includes high probability trading setups, entries, exits, rules of engagements, and confluences. So we're gonna start off with technicals and then come to market makers and the confluence of technicals, market makers, and fundamentals. But then again, I'm gonna have to remind you that in terms of technicals, we're not gonna look much into technicals. But then again, we've covered market makers. So right now, the most important thing is looking at this confluences between market makers, technicals, and fundamentals. So without wasting any time, we're just gonna go straight into it. So this is how it starts. Basically, before you can start trading any technicals, you just need to make sure that you have a minimum. You have to make sure that you have a minimum of like three confluences. For me personally, for me to trade a harmonic pattern, I wouldn't just trade an advanced pattern or harmonic pattern because of there's a Hartley cipher pair, total or butterfly. It needs to have some other things like support and resistance, or trend lines or trend channels, Fibonacci retracements and extensions, moving averages, or a simple pattern. So we're just gonna look at few examples that I've already made, the work that I've made previously that includes technicals, market makers, and fundamentals. But then with regards to fundamentals, I'm still gonna show you how you can really incorporate fundamentals in your trading. Because you can't just woke up any given time and say I'm gonna trade fundamentals. You need to look at your economic calendar and then translate what you've seen on your economic calendar into your trading charts. So with regards to technicals, we know that we don't like trading technicals as much as market makers, but then the trick is in using them both at the same time. So instead of taking there's a category one type of signal, it's just technical. So when you see when taking a position and it's only technicals, it's a confluence of a harmonic pattern or maybe just support and resistance, trend lines, and Fibonacci. It's a good high probability category one pattern, because it has everything that is from the technical side of this part. This, I don't know how to put it, but I hope you get my point. So when you trade technicals, you just need to make it a point that you trade, not just one simple pattern or one harmonic pattern or just support and resistance. Just put them together. Have at least minimum of three confluences. Then for me, that's enough reason why I should enter into that position. And then secondly, it's market makers. So we've already done market makers. I bet this course it's all about market makers, advanced market makers. So we've already covered this area. We know what the accumulation phase is. We know the stop hand, the reversal, and then these are the only three things that we need to concern ourselves with. Accumulation phase, we see it, we enter on stop hand, and then we ride through the long sustained run, and then we re-enter or close on reversal. So number three, it's when market makers meet technicals and fundamentals. So this is the most important part of it. So we're just gonna look at this category three type of setups, and then it's very simple and straightforward. When you see a setup forming up and it's only technicals, it's a category one. It has low probability, and then when you see a setup happening and it's only market makers, it's a let me just say a medium probability type of setup. So you want to take that, and then when you see technicals match market makers, and then that's a kill right there. You understand? So just make sure that you're able to spot the market makers and technicals converging all at the same area. So let's just get straight into it. So I'm just gonna show you. Let me just put this here. So for now, I want us to look at only technicals, because as you can see, there's also market makers here. But then let's just ignore market makers for just this time. So I want us to look at just technicals. So as you can see on this flashcard, I have a bearish harmonic, not harmonic, continuation pattern, which is a flag pattern, and then where it's on major previous support resistance. So I already have two confluences on this setup here, because there's major harmonic pattern, not harmonic actually, continuation, some simple continuation pattern that is on previous major support and resistance area. It's retesting that high probability area there, because this was support resistance. It came down here and now it's coming back to retest again. So before it comes here, you already notice that there's major support and resistance, and this is an area that you should be very interested in taking positions from. So support and resistance, and there's also bearish continuation pattern, which is a flag pattern here. And if you look closely there, there's also an 800 moving average that is in line with the trend. So no matter how you trade, just make sure that you trade in line with the trend. That is the other most important thing. Always trade in line with the trend. Stop counter trending, ladies and gentlemen. So we've seen here, and if you can look closely here, there's like harmonic pattern, because like X, A, B, C, D, and then it didn't violate. It actually did violate just a little bit, maybe with like 2 to 5 pips. You see this high is a little bit just higher than that high. So for me, that was a harmonic pattern, but it was what do you call the word? Okay, it's cool, but then it was invalidated. Yeah, that is the word, invalidated. So X, A, B, C, D, this is where you want to enter a position. So, and then if you consider also Fibonacci, this might be a 50% to 61.8% Fibonacci retracement, but this for me is a 50%. So one, it's a simple continuation pattern, a flag pattern. Two, support and resistance. Three, Fibonacci retracement, and then four, just nearby, just close to a moving average. So it's almost four confluences with regards to technicals only. So let's go to the next one. There it is. It's the same pattern. It's from the same setup, but then in this case, remember, now it has retested again and retested that moving average again and retested that previous resistance, retesting it again. So this is a very major, high probability trading pattern. As you can see, this was a breakout from this lower trend line. It broke below and then coming back to retest again. So it's at the same time, it's a breakout, it's a harmonic, it's a continuation pattern, it's a major support and resistance, moving averages, and also Fibonacci there. So that's 50% to 618 Fibonacci retracement. So it's also a very, very good high probability. So if you didn't take a position here, now it's an opportunity to re-enter again on that what do you call, resistance there, or the resistance retest there, or the breakout retest, whatever that you're comfortable calling it, it's okay. So those are only the technicals. Here's another one. I hope you are able to see this here. This is a major resistance area, diagonal resistance, because you can see it's a trend channel, but it's bearish, so it's looking downwards. And also you can see our moving averages are pointing downwards. This comes after this here. As you can see, after this pin there, the spike there, here it is, and then now it's coming back down here. So what it does, it starts to range again, range for like 1, 2, 3 weeks. The fourth week, which was the second week of the month of July, and then what it did, give us a retest on that resistance there, and then it giving us a harmonic pattern. What else? And there's also like a continuation flag pattern there. So it's like in terms of Fibonacci, I'm not gonna go into that because there's a harmonic pattern there, and then it looks like it's a Gartley. Yeah, I think it is a Gartley. So it's a Gartley there. That finish up that completes on 78.6, and there's major resistance there, number 2. Number 3, there's 3. There is harmonic, not harmonic actually, continuation pattern. And then what do we have? Number 4. Now for me, this is good enough for me. I already have 3 confluences with regards to technical, so that's a very good position for me. Good area to take a short position. Here's another one, major support and resistance area on that moving average. There's also like harmonic pattern and a continuation pattern there. So continuation pattern number 1, harmonic pattern number 2, major support and resistance number 3, harmonic pattern number 4. And then if you can measure our Fibonacci from the previous high to this low there, I think we will realize that this is a 38.2 Fibonacci. Not from here to here, but from here to that previous high there, which is above what we can see on this chart here. So we have almost up to 4 confluences or convergences on this chart there. On this one, from here to here again, we have continuation of the trend. And then we're not looking at market makers, although it looks it's a proper second week stop and continuation with the trend. But then we're just looking at technicals here. Number one, what do we have? What is very visible? We do have major support and resistance area. Number two, we have continuation pattern, a flag pattern there. We don't have any moving averages. I think in this case you only have two. You have two convergences. With regards to Fibonacci, this is, I think this could be a 23.6, 23. It's nowhere near 38%. This one, so it's also good high probability. We're not looking at market makers or TDI. We're just looking at moving averages, price action, and then simple continuation pattern and harmonic patterns. So another one, we have major resistance there, 1 2 3 4 touches to the upside, and then it's a major resistance area. So in terms of technicals, that's what I'm seeing with regards to this one only. So I'm seeing major resistance which came, price came and retested this high is 1 2 3 4 times. So that's a high value area. So as I was expecting a little pin dead on the upside, so that market makers can stop out everyone that is sold and put the stop losses just above this highs, 25 to 50 pips above this highs. So that's where you should also start putting your pending orders. If you notice this type of an area, just know that retail traders have put their stop losses just above those highs, 10 pips, 15 pips above those highs. That's why you want to put your pending orders, your sell orders there. So going forward, let's see what do we have else. Continuation from that slide there. As we can see, we have major support and resistance. It's the same thing over and over and over. So after having price coming back from this area, it broke below this as support, broke below. We know it has to come back and retest because this is major support, and then it needs to come back and give us a retest on that support as resistance now. So we see that, we take it. Not only that, and then there's a good harmonic continuation pattern, which is a flag, and then it's like the 8.2 Fibonacci retracement with regards to this price action here. So it's 38% retracement. There's also a continuation pattern, and there's also support and resistance. It's just near the moving averages, but it doesn't really touch that moving average, so we're not gonna go into that. So it's also a good high probability. As you can see, I've only talked about setups that have three confluences or convergences. So let's go to another one. There's another one. It's in line with the trend. It's a Fibonacci retracement. There's also major support and resistance there. There's diagonal resistance. There's also a horizontal or resistance there. So when price comes back and comes back to retest here, so you know that there's a high before it even lands here. You wanna put your pending orders around this area. So that's a harmonic pattern right there, and there's also like a continuation pattern there and support and resistance. So basically, when you have a harmonic pattern or a simple pattern, just make sure you have a Fibonacci there, or major support and resistance, or a moving average. So it could potentially be a high value or high probability pattern right there. So this one, there's not much there. It's just in line with the trend, and it has retested that breakout of that resistance there. So it broke below, came back to retest, and then broke the previous low, and then now it's going back to retest the previous high there. So it did exactly that. This is an area that you might be interested in taking, but there is no lot of confluences, convergences on this area. Although it did move very heavily, but then we didn't have a lot of confluences there. So if you're like me, you will be able to take this type of positions, but then you need to have conviction and assurance that it's gonna go in the direction that you had anticipated. You understand? Because initially I wanted to take my positions here on that moving average, but then I just let it be, and then give me signs of reversal, and then if it does that, then I know I'm gonna be comfortable in taking a position. But I don't like taking a position that I'm not very sure whether it's gonna go up or down. I wanna be able to take 5 positions on that one setup. You understand? So let's move along. This is a very nice one as well. As you can see, the trend is going down because there's like a diagonal resistance there. So it did retest that after, I think this was the first week. So it gave us the lowest price of the low price of the previous month. From there, it rallied up, retested that trend line because it's going downwards, and then as you can see, man, it's still trying to, accumulate more positions before it could finally go down. And then after, having accumulated enough positions, they will just go down, completely. So as you can see, there's a cipher pattern there that has retested, a bearish cipher that has retested that resistance area. And as you can see, there are two resistance areas there. There's diagonal resistance and there's also horizontal resistance. So there's horizontal resistance 1, diagonal resistance 2, and there's harmonic pattern 3. So it's a very good high probability setup, which is in line with the trend. And then another one, it's almost like the same thing over and over. So I'm telling you, ladies and gentlemen, if you're able to identify these types of setups and know how to categorize them properly, then you will know which which setups have high probability, which setups you should be aggressive on, and so forth. Like this one, this was very good for me, and I capitalized heavily on this one. So it's like it's a downtrend, as we can see, and then there's also resistance there, which is diagonal. The price is moving within this bearish trend channel, so you want to sell this when it retests that resistance here, and then you want to sell that, not buy here on the support, because it's this is against the trend. So first things first, what do we see? We see a harmonic pattern number 1. It looks like a Gatli. It is a Gatli. It's a Gatli. Number 2, it's there's also a continuation pattern, which is a pennant. Number 3, there's a diagonal resistance there, and then that is our number 3. What else do we have? We don't have any moving averages there, and then we're not gonna go into Fibonacci because we already have, what do you call a harmonic pattern. So when you have a harmonic pattern, your Fibonacci is already being taken care of, because there's no way that you can just assume this harmonic pattern without having to measure it. So when you measure it, you already understand that this is 78.6 Fibonacci, and then you see where it completes on that area there, which is a major diagonal resistance area. And then let's go to this one. This one, it looks very, very good, because this you see, it's a first things first, like as you can see, it's a major downtrend, and then price retested from here. Now we go to here. From that retest there, it went downwards and then gave us a nice bearish flag, and then on that flag there, as you can see, there's major resistance, because it's head and shoulders. The right shoulder is exactly where the left shoulder is, you understand? So for me, there's a high value area. There's also moving averages. So like there's a two harmonic patterns, and not harmonic simple patterns. There's a reversal pattern and a continuation pattern. So it's like left shoulder, head, and the right shoulder, which is head and shoulders. That's the first pattern that we see. Second pattern is a bearish continuation pattern. That's number 2. Number 3, there's a resistance there, which is very good. Number 4, there's moving average there. Number 5, it's like 52, 38.2% Fibonacci retracement from this low to that high. So this is 50%. So we have 5 convergences on that same area. So this was a very high probability setup. So if you're able to identify this type of a setup, you take it, you kill it. This is how you use confluences, but only looking at technicals. Remember, we're not looking at market makers, ladies and gentlemen. So another one, breakout, coming back and retest. There it is, support and resistance. There's no significant Fibonacci ratios here, it's just support and resistance. There's also 50 moving averages there, 50 moving average, retest. And then if you can look closely, it's just that we cannot really see very closely, but then as on the previous videos, as I've explained, there's moving averages. So you can also look at 3 and 13 moving averages cross over 50 and 13 and 50, 15, 200, 200 and 800. So continuing, what do we have here? We have major resistance area, and then we have trend line there, breakout of this trend line. You can see this trend line. We have breakout coming back to retest, which is number 2. We have moving average number 3, 800 moving average retest number 3. There's a Fibonacci retracement here, 50% Fibonacci retracement, so 50 to 618 actually. So this looks good. We have 4 convergences on this chart, only looking at harmonic patterns. What else do we have? Technicals, we don't have much with regards to technicals. It's still this very same setup there. So continuing with that from the Friday midweek reversal, but we're not going to go much into technicals. So I think that is it with regards to confluence of technicals and of just technicals, not in market makers. So right now we're gonna look at technicals of not technicals, confluence of market makers and technicals, and I also show you how to incorporate fundamentals on the setup that has confluences of market makers and technicals. Ladies and gentlemen, I hope this everything that I'm talking about right now makes sense, and I hope you're able to hear me properly and understand what I'm trying to say to you. So okay, let me just just a minute, let me just do this. So now we're gonna look at confluences of only market makers, because right now I think we've covered enough of technical confluences of technicals. Right now we're gonna cover confluence of only market makers, looking only at market makers, different, uh, I don't know how to put it, but let me just open my chart and try to show you what I'm talking about. So without wasting any time, let's get straight into it. We still want to look at the same setups that we talked about, because is this, you just need to have that 3D eye, be able to identify what you comfortable trading and so forth. So what's happening here, we have I'm only looking at this week here, because it has a lot of market maker confluences. So you can see we got a proper stop and low, the level 1 correction, level 2 correction, level 3. So on that level 3 is 3 days of rally, and then with 3 levels, and this is Thursday, so obviously you expect a midweek reversal. So it's for me, that is how I put that is how I would say this. For me, it's a 33 trade, because it's 3 levels on 30 days, so I'm expecting a reversal right there. So for the fact that it's in confluence with that major support and resistance, it's a kill for me, you understand? So that is how you incorporate your market makers with technicals. You see this a level 3 on the 3rd day. After 3 days of rise with 3 levels, you also look at your technicals. What do you have? You have harmonic, not harmonic, some major support and resistance there. You have a completing continuation pattern there. There's no moving average. It's very close, but then it doesn't really touch it. So that's a very good one for me with regards to market makers. So after having noticing this, you will first look at your move, because you've already seen that this is a high value area that the price is most likely to retrace from. So from now on, you look, if you're not very sure, you want to wait for like what do you call that? You want to wait for confirmations. You just wait for candlestick for confirmations, your morning stars, evening stars, spinning tops, morning stars, yeah, like I said. So, and again, you look at your moving averages. First moving average crossover 3 and 13. After you see that, you take an entry, and now that, because it's confirmed that it's an area that the price is reversing from, you take a very big nice heavy positions. I'm an aggressive trader, so when I see setup like this, I'm not gonna take one position. I'll enter like 5 to 10 positions, opening like whatever position size that I'm comfortable with, and that's gonna allow me not to blow my account, even if I was wrong for like 50 pips, even if I get like negative 50 pips drawdown, I will still be able to handle that, because I don't over leverage, I don't over trade, I don't open more than what my account can handle. You understand? So number one. Number two, the same thing is happening again. It's coming back to retest, and now it's like it's on level 3. It's still on level 3 because it's on level 1, level 2, level 3. And remember, it hasn't taken out that previous high. So this area, it's still that reset area, or an area that you are interested in taking a position from. So remember, Thursday midweek reversal, and then price came back, gave us 2 levels, and came back and accumulated the second week on Monday. It didn't give. Remember, we were waiting for a proper stop and high, but then we didn't get there. So we wait for whatever that we're comfortable in taking. I was waiting for price to come back around those areas, or retest that moving average. It didn't give me that on Friday, on Tuesday. So if it doesn't give me that on Tuesday, I wait until I get my thing either on Thursday or Friday midweek reversal. It did exactly that. It didn't give me my stop and high on Tuesday. This is an inside structure shallow stop hand. So for me, it's not good enough. But then this one is a proper reversal. You can see how much it took out those people that had bought there, had sold here. People that has sold here, they put their stop losses a few pips above those highs. People that bought here, that sold here, they put the retail traders, they put their stop losses 5 to 10 pips above those highs, and or 25 to 50 pips are just above those highs. And then, because market makers know that, you see what happened here. They came back and just gave us a little pain. As you can see, the pain there, it goes like 5 to 10 pips above the previous high. Why did it give us that? Because it wanted to take out the people that had stop losses above those highs there. We know that. We know how retail traders trade. So when you see this type of a setup, don't put your stop losses with the retail traders. Put them a little bit higher there, because you know retail traders have theirs here. So when you see that, that's where you put your pending orders, sell orders. It comes back and then takes you in, fills you in, and then there you go. This is order flow, ladies and gentlemen. You need to know how to put your pending orders. And then after you get in here, because you know it's definitely gonna take out this lows, because this is the second week, and then it didn't give us a stop and high on Tuesday. It instead gave us a reversal on 1, 2, 3, 4 on Thursday, which is on look at it this way. It's major support and resistance. There's a harmonic pattern. There's a continuation pattern. There's moving average there. What else do we have? It's Thursday midweek reversal. It's second week of the month, so it's a high probability setup. Look at how the price fell from then. It's like it plummeted, like from that high there. Give it like 200 pip downfall in like a few hours, 4 hours to be precise. You understand? So that's a very huge move. So you don't want to miss this type of moves. So you want to be able to you also want to be able to anticipate this type of moves, because you know when you know your things, you know how price is gonna move, and then on average per month, how much is it supposed to move from the highest to the lowest price of the month. You should be able to calculate your numbers, like as I've said. So here's another one. This is a very good one here. Here's another one from this low price of the month. One, two. We only have 2 levels, because you can see this is the lowest price of this month, and then give us a nice rally. Came back, didn't check out the previous. So this is level 1 correction. So we can't say this is level 2, because it needs to be higher than the previous high. So it's level 1 correction, level 2. So we only managed to get level 2 levels. So because this is not a level, because it doesn't violate that high there. So if this high was above that high, then for me I would be comfortable or obviously this level 1 and then level 2 and then level 3. But then for now there are not 3 levels. It's just 2 levels in like 1, 2, 3 or 4 weeks. You understand? So but then, because of you have already identified this area, regardless of whether it comes on Monday or Tuesday or Wednesday, the fact of the matter is that it came to that specific area that you anticipate the price is gonna go to. So when it comes to that area, you take it, you kill it. You understand? So it came to that area. There's harmonic pattern there, and then second week of the month, which we're expecting stop band. It didn't give us that Tuesday stop band. Instead, it gave us on that accumulation day. Give us stop and high. I think it's New York Open. Give us a reversal on New York Open, and it went down. You understand? So that's a harmonic pattern there. There's continuation pattern there, and there's also major diagonal resistance there. So for me, that is good enough. So that is how you incorporate your fundamentals, not fundamentals actually. Excuse me. Your technicals and market makers. This is very important, ladies and gentlemen. No matter how long you've been trading, if you do not know how to incorporate this or how to put them together like this, you will not be profitable, or you'll only be profitable half of the time. You need to know where the price is going to be for when is, like, for instance, let me put it properly. You need to know where the price has been and where it's gonna go next, on what week, on what day, on what time. That is precision. You need to be very precise. Don't be like those people that only take chances, or they're not sure. They just they speculate. We don't speculate. We follow where the money goes. Where the money is going, that's where we want to go as well. You understand? So this is a very good one as well. There's a harmonic pattern there. There's a continuation pattern there, and then there's also a moving average there. There's no significant market maker pattern there. As we can see, the price gave us a nice stop and high, or maybe this was a reversal on Monday. This is the same setup here. This one is the same thing. So you can see it was a very nice one. After how many levels of rise in how many days? 1, 2, 3, 4. It's 4 levels. I hope now you can see how levels for me they are inconsistent, because you can see 1, 2, 3, 4, 4 days of rise for 4 days, 4 days of rise for 4 levels. So that for me that's good enough, because each and every single day has its own level of rise. So I would consider this as a reversal, even though there are no much reversal patterns here, but then there's continuation. Remember, there's a very strong bearish trend, so you wanna always trade in line with that. So there's the support here, broke below, coming back to retest that support and resistance, and then it went down, came back, retested that previous support as a resistance, and there's confluences there. So for me, it's a very high probability setup right there. Sometimes you don't need to have a lot of convergences or confluences. You need to have